the UK economy has a lot of problems. Yeah, it's really is struggling. The sort of the depth and the scale of the problems are pretty serious when you start factoring in things like investment, low growth, the skills gap. There's quite a lot to unpack. The debt, the fact that middle class Britons haven't seen a real wage increase since 2008 for a decade and a half, and things are starting to catch up with us. And yeah, as you can see the date at the top, just at the end of November, I did one article, quickly became two articles, as my particularly my YouTube algorithm was filled with all these videos about the impending economic doom of the UK. They're all pretty similar, but yeah, I left a lot on the cutting board as well. Could have gone to a part three actually, but yeah, it's.
So you've broken down the key sort of financial issues with the state of the UK today, then.
Yeah, that's right. Looking at things like low growth, investment, debt, rising interest rates, obviously the cost of living crisis. Part two looked at the housing crisis we have, and then how all of this is rebounding on public services. We've got crumbling schools. We've got a failing health service, arguably even non-existent.
Sorry to interrupt, but that is a staggering increase in public sector debt, isn't it?
Yes, yeah, that's
Jesus
right.
Christ.
After 2008, because of the bailouts, it increased significantly, but it's just gone up and up. I mean, to be fair, you could say the same thing for most G20 countries, Western Europe. The debt seemingly only goes one way, but it's pretty bad. It's particularly bad for the UK.
So the thing I muse on this is the Western world heading to financial collapse? Or did the financial collapse happen in 2008 and the body just hasn't hit the floor yet?
That's a good question. I mean, I don't want to be a doom merchant, but it keeps getting worse, and
I don't know ourselves as reality merchants.
Right? Okay.
What's the reality of it? Because I mean, I'm no economist. Just to be very, very clear, I don't know anything about the economy, and I can't count. But that looks bad.
Yeah, it is bad. I mean, the deficits are, how do I say this? Okay, as long as the interest rate we pay on our debts is manageable. But the problem is, of course, recently, the last 18 months, 2 years, interest rates have gone up. The cost of borrowing goes up. The cost of servicing our existing debt has obviously increased. And we can't simply kick the can down the road by borrowing more money. That's not.
That can is getting heavier and heavier and heavier.
Exactly.
And harder to kick.
So just as a quick thing, who do we owe this money to?
Well, a lot is owned by the Bank of England, some by foreign investors. It's a bit complex. I think about 25% of our debt is inflation linked, if I'm not mistaken. Now, that's a problem because we're in a period of high inflation. So that's also a big structural problem too. But even though a lot is owned by the Bank of England, there's only so many units of pound sterling and our version of the bond, the gilts, that international markets can absorb, really. And because of all the instability, we've had the merry-go-round at number 10. We've had Brexit. We've had all sorts of things, referendums. That's also causing. That's also a big cause. But certainly the 2008 crisis and our response to it is, broadly speaking, where it all began. But
because I mean, there was a time where China and the likes would have been buying the debt, but increasingly they're just not that interested in Western debt anymore.
Is it because they think we're not going to pay it back?
There's notions like that. Yeah. Yes, I don't know exactly what their reasons were. They didn't share them, but they've decided to buy gold instead.
Yeah, that's interesting.
Really?
Yeah, good investment. The problem is it's a global crisis, isn't it? Lots of countries have problems with inflation and things, and some of these countries with the Russia-Ukraine war leading to commodity prices, particularly oil and gas going up in price. They're saying, sorry, we can't buy your pound sterling bonds, your euro bonds. We're we need to sort of get our own house in order. Now we're up a creek because the traditional international investors are sort of looking elsewhere. If you zoom out, the dollar is rising in value. That's a problem for a lot of countries as well. And, pound sterling is a bit further down the list, isn't it? Let's be honest.
Yes.
So,
if you're going to hold a foreign currency in Asia, you might as well go for the dollar. I mean, not a lot of reason to hold the pound.
But this is the debt and the deficit. This isn't the complete economic picture, and certainly not the a good. There are other problems we have, of course, we see on a daily basis.
And anything else you want me to scroll down to?
Yeah, if we go down, I mean, I think growth is. I started with growth because that determines so much, and it's been at this level now for basically about 2 calendar years. So growth in the region of less than a 1 percentage point. So
1.2 million racists from Nigeria is less than 1% growth.
And immigration.
James O'Brien said that the immigration caused the growth, didn't he?
He did.
Where's the growth then?
Well, just imagine how much further down this would be. If
I see.
Have those
right. Yes.
It'd be negative.
Gotcha.
So that's what some people say. Yeah, it's even worse without the great immigration.
There we go. There we go. Right.
But the problem is we're not growing, but our population is growing lightly because of what is it, like 60% is because of mass immigration and their dependents that they bring and then their offspring. So we've got stagnant economy, a growing population, so that means more scarcity, less goods and services.
What you've got here is sort of stagnant headline growth. But of course, if the population is growing, you've actually got declining GDP per capita.
Yeah, exactly. So it's being shared out.
Yeah. Hi, folks. We've rolled out a new feature on the website, which is the ability to pay for an individual piece of content. So usually it's £5 a month every month to subscribe to all of the content on the website. But I appreciate there are going to be people who simply don't want to do that. They would be interested instead in purchasing a single piece of content for a lower amount, and they've got a particular niche that they're interested in watching. And so they don't want every single piece of content. They just want this one thing. So we've introduced this function where you can just simply purchase the one thing for £1.89, which I think is about $2.30 at the current exchange rates. And then that's just yours forever. So there's no sort of commitment there. There's no rolling subscription. It's just that one thing. So that's an option now that's on the website. It's completely live. It's completely available. And please go and enjoy it.
I was going to say, I can't count. So you're going to have to walk me through this. But if there's X amount of one resource and then Y amount of another, and the Y grows and these have to be shared, then that surely means the people in that category get less of what has to be shared among them from that.
And that's the problem. Yeah, I mean, the x-axis only goes up to 2%. So, it's...
And actually, that's a really good point. So the axis only goes up to 2%, which we don't get anywhere near by.
No, it's recommended.
This is the growth of the economy. The other thing to bear in mind is the amount of debt.
Is it fair to characterize this as the growth of the economy? This is a snapshot of the economy.
Yeah.
Sorry, I'm just being...
But the total economy is about the same size as the amount of debt. We've got 100% debt to GDP ratio.
Yeah, that's right. Yeah,
and the debt is rising. Like you said, a lot of it is index linked, but it's rising at it's strata, but it's going to be around about 4% a year. So the debt is rising at 4% a year. It's the same size as the economy, and the economy is stagnating.
So what you're saying is we should cash out now.
No, what I'm saying is that we're in a debt spiral.
Yes,
is the debt is continuing to grow, and it's just gonna eat everything.
Yeah. Effectively, we kind of are in a recession from that perspective, because the debt interest repayments are obviously going to send us into the minus, aren't they? Because this doesn't factor in that. This is just the growth.
The only line item bigger than what we pay on the interest is the NHS.
Yeah,
even then it's close.
Of course, it's the NHS.
Yeah,
of course it is.
So yes, I actually look at the debt to GDP ratio below that, but obviously inflation. Okay, it's better in that it's lower, but as you point out, Dan, that just means that prices are rising slightly slower, slightly less. Now, to be fair, the end of 2022, it was your double digit levels. It's pretty bad. But
and bear in mind that these, not only are these incredibly bad, double-digit levels of inflation, like 11% inflation a year. Right now, if you were an investor and you invested your money at 11% per year, you could be a bus driver and you'd retire very rich indeed.
So again, I not an economist, this compounds, right?
Yes.
Because for it to say it was 11% one year, for it to return to the previous price that it was, it would have to be negative 11% the next year. So what we are seeing is a continual rise. And so when they say, inflation is down to 4.6%, yes, that's on top of that must be like 100% inflation.
If inflation is down to 4.6%, it's growing at 4.6% on top of the sum of all of that.
Yeah. So the sum of all that looks like it's probably like 105 or 110%, something like that. So
we really need to go into the negative to get back to where we were before this crisis started. But we've always got a never-ending cost of living crisis here, haven't we? It was before Russia, Ukraine, and arguably, if you want to talk about house prices, it was before COVID. So, really, it's that there's no long-term plan for this.
Tell you what, that commune in Granada is looking at people. Just saying.
Yeah, quite good. I mean, over here we produce apparently racism and little else.
Our main export. I think.
Yeah, but in Russia they've got oil reserves, they've got commodities, they've got vast fields of wheat. We know over here we're actively encouraging farmers to get out of the business.
Yeah, it's crazy.
We're either going to regulate them out of the business or we're going to incentivize them out. But for some reason, the British government is desperate to strip out all the agriculture, which is like the one key. I always say there's two key foundations of any economy: it's agriculture and energy. You can change anything else around, but you need agriculture and energy. And what else are they doing on energy? Oh well, they're basically building new power cables over the channel.
So we can get French nuclear power.
Yes, so we're reliant on the French.
In 2011, the Conservative Lib Dem coalition were asked if they're going to build nuclear power plants. And this is a quote, I think it's from Nick Clegg. He said, no, it's going to take too long. It won't be done for 10 years. Well, 10 years later, it would have been nice to have had all those nuclear power plants.
Yes, it would have,
Yes.
Now, given where we are now, nuclear power is looking a much more attractive
it was looking like that all the time, like from the very conception of nuclear power. It was always looking like that. Sorry.
No, you're right. Yeah. Interest rates. I mean, obviously they've climbed and climbed. So, as they go up, so do our debt service repayments, which, as Dan said, is now like second on the list of government expenditures. So the first graph with the debt, kind of the explosion of government debt, means that, when interest rates go up, the cost of servicing that debt becomes much.
So unlike the GDP growth chart, this one doesn't stop at 2%. This one goes up to 6%.
Yes, it's, this one,
and the UK government just cannot afford 2, let alone 6.
Yes, but that's because this is measuring bad things.
Yes,
the good things stops at 2%. The bad things stops at 6%.
Well, and also it didn't get anywhere near that 2% as well. So there was also that.
The problem is the Bank of England haven't set a date for when interest rates are going to be capped, which is econ speak for, when they're going to stop. They're saying it could be the first half of this year, but then there's always a 3-month lag anyway. So, and those are world.
So my theory that it will be before Q3 is a simple reason that the US will lead it, and they need a feel-good feeling in the economy before the election.
So tell me about capping interest rates, because I don't know how that works. I don't know why that works.
Well, interest rates will keep going. They will keep rising until we reach an equilibrium and things start evening out. But the problem is that this doesn't happen in a vacuum. The Bank of England only has so much power to exercise over monetary inflation. These are affected by other things like commodity prices and overseas investors. And
so, is this something akin to sort of putting a finger in the hole in the dam, and then another comes out, you have to put another finger in?
Well, it's sort of a bait and switch. I mean, really, the money's the inflation is coming from the money they printed.
Yeah,
but they're doing a sleight of hand and saying, oh no, it's because interest rates are too low. I'll tell you one of the main leading indicators for interest rates: shipping costs.
Oh yeah.
So if you got a bunch of Yemenis rebels holding up one of the main shipping lines, leading indicator of inflation. What's this one telling us? Total investment.
So yeah, after debt, interest rates, cost of living, we start looking at investment. We start looking at the skills gap and sort of thing. So investment is an issue in the UK since Brexit. It's sort of flatlined, and we just don't invest properly. The problem is that UK businesses don't invest in capital, machinery, technology, human resources, so training and whatnot. And this is a big structural problem in the economy, because then this affects output. That's why growth is low, and then this is why people don't get wage increases, and it's a self-reinforcing.
So is this chart telling me that China invests 43% of everything they make back into themselves in order to grow?
Well, yeah, that's basically
and
we're into industry and niche markets and things like that. You see, we used to invest a lot. We were one of the highest in Europe, but again, I think that sort of comes back to 2008, and then after Brexit, a lot of confidence in the UK economy dropped, and we've not really picked up since then. So these aren't encouraging.
Because I mean, just on a local practical basis, I mean, this business reinvests a lot into itself. I mean, the reason why you have all of this now is because from the first 2 years, a lot of that money was reinvested back into the business to make it better and better.
That's not the trend.
Yeah, and that is, obviously not what Britain as a whole is doing. Even though places that do show strong growth, the China, the Indias, the Czechs, the Japanese, the Swedes, and even the French. Even the French have got higher investment rates than we have.
Put me in charge of the UK economy.
Yeah. Right. What have we got? Oh dear. What's this one, Justin?
Yeah, this is sort of a bit more on investment. So we've got public sector before that. We've got the private sector. But yeah, again, as things have gotten worse, public sector investment in public services has gone down. Now, obviously, people will recall the austerity period under Cameron in the wake of the bailouts and things, and it's really continued from them. Because if you go back to interest rates, back then interest rates were more manageable. They were lower than we have now. But instead of investing in infrastructure, schools, instead of tackling some of the problems with the NHS, we cut back spending. We've got fewer police on the streets. We've literally got crumbling schools. We might see that on part 2. The perforated concrete needs to be replaced in 700,000 schools and education institutions. So a lot of these problems, the problem is that it's all collapsing in on itself now. And
so you're saying while we were borrowing billions at a low interest rate, we could have used that cheap money to update the infrastructure.
Would have been a good idea. I mean, obviously, as they say, hindsight is always 2020.
But instead, we are in the practice of borrowing money to keep the lights on in the NHS today. So we're borrowing to consume rather than borrowing to invest.
Yes, absolutely. Yeah. Now we're sort of trapped in this sort of cycle. So here's where you see the trend line is pretty consistent up to the vote, and then after that, I think investor confidence just slipped. Obviously, even though the pound devalued, you think people might want to invest more because they're getting more for every €1, $1. But that didn't really happen. A lot of other things sort of play into it. And so it's really, but I'm sure up to that 2016 mark, I think we were sort of, we were leading.
So my issue with this is the way Brexit was done is, have you ever seen that film Blade, where he's got the half human, half vampire? He's got the strengths of the vampires, but none of the weaknesses.
Yeah, we're the opposite of that.
Yeah, the way we did Brexit is we kept all the weaknesses of the EU, and we didn't take on any of the strengths from being independent.
Yeah.
So we basically kept all of the bad things about the EU, and then did none of the things that we were now able to do.
I really think we should have just abolished corporate tax.
Yeah. I mean, there's a whole bunch of things we could have done.
Totally undercut Ireland.
We left the EU and then basically did nothing. So I'm not surprised that the investment rate fell after Brexit, because we were trying to operate on an old model that we were no longer part of, rather than embracing something new.
Yeah, absolutely. I talk about the tax code in part 2. Our tax code is a mess. Corporate tax, whether it's VAT, all of it. It's definitely a big problem, and we need to kind of sort of address that.
So
we go to a flat rate or what we do.
I worked in an office once where our in-house lawyer had a copy of the tax code in his office, and it was just
a big one.
Multiple shelves.
Yeah, absolutely.
And it was one book, the UK tax code.
Crazy.
Yeah.
I mean, can we go to that? 'Cause I wouldn't mind talking about the tax.
Yeah, it's part 2. It's Article 2, so it's the next tab along. Actually, so that's productivity, wage. We're not very productive either, to be honest, and that's a big problem. But of course, if you're not investing in technological upgrades, capital machinery, that's going to impact productivity. And if your company's not as productive, it's that's going to affect wages. And
it fell off trend in 2008.
Again,
and then for some reason we weren't very productive in 2020.
I mean, that I think is probably going to be a fairly universal issue. So I'm not too worried about that. Yeah.
This one.
Household income. Yeah. So again, flatlined. Even left-leaning sources, even The Guardian says we haven't had a real wage increase in a decade and a half, and some people say it's about £11,000 a year.
And bear in mind, these are official numbers. So actually, people have had a pay cut in the last 15 years.
And as I always say, the CPI, the Consumer Price Index, the price of basic goods and services, has gone up about 47.5% in that time. So you can see we're getting hit from both ends. Really, put that in the thing. So wage growth is pretty low, and a lot of people, I think, on the ground level, I know a lot of people in tech and things, and they're like, British companies just don't, they don't pay as much. You're underpaid, you're overworked. They get better offers from overseas and things, and that's also.
So I don't really mind when we're falling behind like Central Europe, because of course they're a bit more liberated than we are on getting on and doing things, and they've taken on less of the ridiculous policies than us. But I really don't like seeing that we're behind France in all of these charts.
Yeah,
that bothers me.
Behind them on both racism and wage growth.
Yes,
but of course, wage growth, you've got to talk about again mass immigration, because that's putting downward pressure on wages as well, and so debt interest repayments are second.
Oh, that's what I was saying about the NHS. Yeah,
that's insane. That's just insane.
So I think the operational budget of the NHS is something like 137 billion.
Yeah,
so it's really, really close at this point.
So is this?
I think housing benefit is third.
That's how much we pay.
Sorry, the UK debt interest payments are almost one NHS per year.
Yes.
God damn.
Yeah, almost. Yeah, 123 billion just being flushed down.
What I do?
This is why we don't have the empire.
Part 2. So this is a few more: housing, mortgages, the tax code. So
let's talk about the taxes then.
Yes,
I hate taxes.
Go up. There's actually a couple of funny anecdotes there, just to obviously there's issues to do with council tax. Is one thing. VAT is kind of a little bit all over the place, with goods being priced differently. There's our corporate tax rate, which is currently 25%, which is just too high. It's just way too high, and so many countries have it lower, and companies are going to go there.
So on this drives me absolutely mental, right? Corporate tax rate. A corporation isn't a person that shouldn't pay taxes, right?
It's just a collection of people.
The people themselves should pay taxes. Raise tax on the individual if you want that money, right? Philosophically, it's messed up. But secondly, strategically, we're going to leave the European Union. Okay, well, how about we look at Britain's nearest neighbor that has, it's a modern first world economy. They all speak English. What's their corporation tax? 12.5%.
Well, they're under big pressure to raise it from the EU.
I'm talking about Ireland.
We are, of course, talking about Ireland, which is why if you use YouTube or whatever, the headquarters are in Ireland. All of the American companies headquartered in Ireland and then just operate in the UK.
Yeah.
So they're deliberately undercutting us. And their economy is, of course, skyrocketing because of this just very small tactical thing that they've done. And we could just be like, okay, we're going to go 6.5%. Now,
well, we could have gone zero. I would have gone zero.
I would have gone zero too.
We could have done that the day after Brexit.
Yeah, exactly.
We could have just said we're out. Corporation taxes down to zero, and there would have been a queue of companies.
I know
coming here.
It is insufferable,
bringing all the jobs with them.
It is absolutely insufferable. But for some reason, we're trapped in this old paradigm.
And a bit like the NHS, they don't want to address these problems because even the short-term levelling up is going to lead to a fall in tax revenue. And if you go to the first 5-7 minutes of our conversation, we're looking at Article 1. We can't afford that because we've already got
unbelievable debt.
Unbelievable debt and deficit and whatnot. If you scroll down a bit, VAT is quite funny. I think in 2022, I think we spent almost £1 million on a court case deciding whether a Jaffa cake was a biscuit with a bit of chocolate on it or a cake with chocolate on it, because that affects its VAT
treatment,
VAT bracket. And it's just, and the same thing for gingerbread man with a chocolate smile. Well, if they've got the chocolate smile, that means they need to be at 0.25%. And it's like, I hate to be that person, but I'm sure we're the only country that can produce these kinds of mind-boggling.
I mean, it's all starting to sound like a Ayn Rand novel at this point.
Yeah, absolutely. The end of the article really looks at how this is impacting on policing, law enforcement, education, healthcare, infrastructure, and whatnot. And I've got to be honest, guys, at this point, I just had to end the article because my head was about to explode.
Yeah.
This is so. I saw what happened over COVID and just thought, I'm buying private medical insurance.
Oh yeah, absolutely. It's almost because it's de facto closed off to you, and then you're left with private, only private options.
Something like 15% of the entire country is currently on an NHS waiting list.
Yeah, it's
right. Yeah.
Like
that is crazy, isn't it?
It's mad. Yeah, it's absolutely mad.
How is that sustainable?
It's not, and it's not going down.
Yeah.
It's just like, okay, that's bonkers. Fair enough.
Private healthcare premiums are going to go up in price because they're going to know that a lot of people are saying just what Dan said a minute ago, and they're going to be looking at whatever, is it Bupa and other things. Yeah. But then the market will demand a lot of this. Obviously poverty, destitution, food bank usage is at an all-time high. And
you try and measure the lost investment, so it'd be an extra 31 invested into industry.
Yeah, if the trend continues. Scroll up a little bit. What was the heading for that? I think that was a bit. That was a bit on Brexit. Look, hands up. I was for Brexit at the time. I think we were sold a lie. To be honest, that's I didn't want.
Oh no, I disagree with that. No.
Go into.
I don't think the Brexit the problem. The problem is that we didn't take advantage of any of the things that it offered us.
Sure. Yeah. Sure.
We still could.
Yeah.
We could tomorrow.
Oh yeah. Exactly.
The Conservatives have got the physical power to do everything that would work in our advantage.
Yeah.
I just put a little bit on Brexit, immigration, because obviously those are quite large topics, but to sort of get a bit of perspective.
Mass immigration gets a mention.
Yeah, towards the end. So.
Radical Liberation had a good definition of mass immigration, which I quite like, which is mass immigration is any level of immigration that exceeds the house building of a nation.
Oh, that's a good one.
And so what are we? So we were at
200,000 a year.
200? No, it's more. No,
we built 200,000 houses.
Oh, right. I was going to say, yeah.
Oh, yeah. Our immigration way.
So basically, our immigration rates is about 3 times net immigration rate, about 3 times the level of house building.
The problem with that is that house building is based on the amount of immigration that we're having. The reason we build 200,000 houses a year is because of the number of people coming in. So if we had, say, 5,000 people coming in every year, then we wouldn't build 200,000 houses.
And a lot of the quality of these new builds are just not. They're appalling. Yeah, they're for individuals. They're not for families. So yeah, I mean, it's there's a lot. There's a lot of good things. I mean, I actually did a podcast with Radical Liberation precisely on these articles, and we looked at these. This is quite good, actually. This is a screen cap from a YouTuber called the Wandering Turnip, who basically goes across towns and cities in the UK, and he sort of documents the decline on the ground. level, particularly with property and industry.
And we can do that in Swindon. We can just walk through the town. It's exactly the same.
Noticed. Yeah, I did. Yeah. But
people don't believe me, but like 10 years ago, Swindon was actually quite nice. Like, that was heaving down there.
The whole country was actually, yeah. I said this to Dan in the notes. So you did a talk with Peter Whittle round about the end of the summer. It was quite downbeat, but we all are, and that's what kind of inadvertently inspired these articles, Carl. Right. So thanks.
Oh, well, no, I appreciate the work.
But no, you see the decline in real time. You see it around you, and it's not nice because it doesn't have to be like this. It didn't used to be like this, but because of our traitorous elites, here we are.
We need to clear them out.
If you appreciated that episode from the podcast of the Lotus Eaters, you can go to lotuseaters.com to get access to all the premium content that's on the site, such as the Brokenomics series, this episode on behavioral economics. If you'd like to find out what else is being put out, you can follow on Twitter at lotuseaters_com on Twitter. Thank you and goodbye.